So here's the two breaks. There's the break of 28s. There's the break of 55. Prior to that, you get a break of 48s, which was the previous high of the day. So I'll run these two through. I'll run you through the first one, i.e. the break to the downside. So this was the one where, yeah, this is the first time down there. You could be looking at this and thinking, right, here's my chance. I'm going to get myself short through the 28. So you've already identified the opportunity. You already know what you're looking for. So we're going to get this little drop down in a moment. We're going to get down to 28s. There you get a little bit of pace picking up, not much. But you know what you want to do. There's no point in jumping in here. If you're jumping in here around 34, 35, essentially you're guessing that this is going to keep on going. And that's a bit of a hopeful trade. You don't want to be taking hopeful trades. But at the moment, this move down is looking acceptable. Slowly progressing, but we're selling into that bid. So here we go, 1200 sold into 31s and 31 goes offered. That's good news. This is all looking okay. Trades 30s, 30s goes offered. So looking quite positive here. Now price action previously, for the last few days, anytime you got any move a bit like this, where it's steadily sold, any move like that would typically then finish with sticky price action, two-way activity, and then a turnaround. So we need to see something different this time. Down to 28s. This is where you should be thinking to yourself, right, I want to sell this. In fact, this traded back into 28s and the offer comes back, 400 trades, 600, 700 trades. That's looking all right. First warning sign though, that bids come straight back. Whereas the move from 35 down, the bid didn't. Bid's taken again. Now what you want to see for a break here is when it takes the bid out, so when it goes offered at 28, you won't see selling into 27. So far, we've got 55 lots. That's hardly the way that it's been moving down. The way it came down, it's sell 200, 300, 400. Gets to the breakout point, the point where it should matter, the point where a seller should come in and 55 lots get traded. And the bid then flips over and over. It keeps going bid, offered, bid, offered, bid, offered here. And no interest in trading down to 27. So we've now got 3,000 absorbed at 28. So reasonably neutral, both sides. And now bid 29. And that's on the back of 2 more lots getting sold. So what is this market showing you is that people might be willing to try and get filled on the offer here, but no one's willing to come and push this. That's a sign of absorption. It's also being absorbed on the bid as well. The bid keeps coming back, keeps coming back, keeps coming back. From 35s down, once the bid got sold to and the market went offered, the bid never came back. So this should be something quite nervous, particularly that, and that was a good sign. When it went offered 29 and nothing traded 28s and the bid came straight back. Here we go. Offered 29, bid goes straight back. Now it's showing if you want to buy 28s, you're not getting them, you're going to have to pay higher prices. This is a sign this move's not happening. Slow down, inability to sell into 27, comfortable with the market to absorb the 28s. That's a sign that this isn't going to break. That price action was not good for it. Got down there, activity slowed down, and there was a happiness to just trade the same price and then a bid that stepped up as well. That's the kind of thing you don't want to see. That's the kind of thing that price action wise is saying to you, this move's not on. It gave you a chance to go long. I'm not suggesting that you necessarily would have taken that. But with the way it was trading, I feel that the percentage chance of a move was more skewed to the upside than the downside. So what we'll do is we'll move it on and we'll go and have a look at the difference between that. Think about the way it slowed down, about the unwillingness to sell into the next price, about the ability for it to very easily go back bid at that price. And then once it had gone back bid, people are willing to buy the next price as well. Contrast that to the move up through 47s, and this is more what you want to see with a break. Also, what I'll point out on this is think about the expectation. We talked about what do you expect to happen once the move gets going. You expect quick, stall, consolidate, quick again. So this is the move just here. We're just coming through these 44, so 45 bid. Not too much action at the moment. There we go, very quick, 46, 47, bid, both of them together. So that was quite an aggressive move to take out two prices in one. No one sold anything back. 48s has gone bid as well. Still nothing getting sold back. So we're now up at the point to break out. And remember, this is before the actual break. The actual break's 55s. But this is potentially an opportunity to get in beforehand. So you're getting in on that trend break, on the break of the earlier high. Nothing's trading back. So again, think about the way we traded at the bottom. 325s has traded at 48. So we've taken that market bid and nothing's traded back into 48. So there's no selling up here, it seems. Now it's happy, like it did at the low, it's happy to move the bids up quickly rather than the other way round. At the low, the offer just kept coming back. This time, the offer's not coming back at all, really. It's coming back again at 55s, so that is your next level. This is the point where we just jumped up here. And like I said, with any kind of break, you expect quick, a little stall, and then potentially keep on going. So this shouldn't be a reason to panic yourself out. This should be a reason to be thinking, right, can I get in any more on the break of 55? And now you see once again 53s, so this time the absorption is to the upside. The market is happy to get filled on the bid here. Is there any selling there? 53s went offered and no one sold. 53 offered again, bid comes straight back. So the key thing here is not just the 53s, it's what then trades next. Do we then take 54 bid or do we take 52 offered? 54 goes bid. Can it take the 54s back? Yes. Will anyone sell into 53s? Can it get 53 offered? Because previously it could get 53 offered quite easily. You know, it's happy to trade bid offer at 53. Now not so much. You're not seeing any selling. It sold 32 into 53 there. And that was it. Now we're trading back up into 54. So the buyers are still willing to hit the offer. They're still willing to trade into 54s. Sellers, not a great deal of willingness to trade into 53s. So if you're in, this is where you should be expecting the market to slow down, but this is where your confidence should be building that you are right on this. Even though it's not necessarily flying around, we've already seen that pace on the way up. It got 53 offered there. Straight away, almost instantly, the bid comes back. 54 bid, 55 bid. This is where you think, right, now I've got it. Now I'm right. And then it takes on the next leg. And this is so often what happens with a breakout. After that little stall that we got here, bit of volume traded, it then takes the next leg up. Pace. And it takes price out, takes price out, takes price out. That's what you want to see on a breakout. And that should be enough, like, once more, to keep you in. Jumps, when it jumps like that, that's a clue to get out. Because that's essentially showing a bit of panic. People have decided, right, I'm not getting it at these lower prices now, I'm going to have to go higher. And that little push up is a show of desperation, which should be a reason then to give you a chance to get out. Where have we got up to? Previous day's high at 64. So, and again, another reason that you could see the market stall there. But again, what happens, puts in more volume, very similar to here, sits between 60 and 64. So I haven't shown the rest of this, But the price action there, extremely similar, extremely similar to what you got down here, and then you got the next leg up towards the recent high at 73. So hopefully you can see there the difference in a breakout that doesn't have the action that you want to see compared to a breakout that does. And when you see the activity that you want to see, you've already identified the areas to get in, you've already identified what you think should happen, where you think this should go. So that bit of it's done, that job's done. It's then a case of, does the price action match? To the upside yesterday, it did very much. To the downside, it absolutely didn't. That's the key thing, and that's why price action is so important.